political shakeup has just wrapped up in Canada. The Liberals are back in power, but this time with a minority government, which means that they will need to work with other parties to get things done. For anyone interested in real estate, whether you're a homeowner, renter, investor, or just dreaming of buying your first place, this election result matters. Join me as I dive into the latest trends, themes, and data shaping Toronto's real estate market, and let's navigate this evolving story together. Fixed rates are creeping up and variable rate discounts are shrinking. If you've been following the news, you know that interest rates have been a big deal. So why are lenders pulling back? Simply put, it's uncertainty. According to industry veteran Ron Butler, the big banks want to cover their bets in case there's a sudden rate move that leaves them in a bad spot. Why variable rates still have room to fall? A familiar playbook. When big banks can sell fixed rates, they'll disincentivize variable, and this pattern isn't new. During the 2008 financial crisis, Butler recalls lenders also pulling back sharply on discounts. Today's environment is marked by uncertainty, not just around rates, but around broader economic signals, including tariffs, global trade disruptions, and stock market volatility. It's all just so confusing. Most experts think that we will see a couple more small cuts this year, maybe bringing the rate down to 2.25 by the end of 2025. This suggests that while initial variable rate pricing might seem less appealing now, the actual rates for borrowers are still projected to decline. Just don't expect a plunge back to pandemic lows given the Bank of Canada's inflation vigilance. Opportunity knocks for sub 4% rates. Butler's advice, snatch up any 5-year option beginning with a 3, a benchmark that would have been celebrated just 24 months ago. While every situation is unique, please speak with your mortgage advisor about the importance of mortgage term flexibility, especially for those expecting a life change within the next few years. Toronto's condo market just weathered a brutal April as April's active condo inventory surged past 12,000 listings, a figure that would have been considered excessive even in the most aggressive spring markets. For context, 9,000 active listings in April would typically be seen as high. Why? A combination of project completions and a stall in resale demand, developers are delivering units into a market that no longer has a queue of end users or rental investors. With sales plummeting to a mere 1,430 condo units sold, a massive drop from the typical 2,500 to 3,500 range for April, absorption is deteriorating rapidly and sellers are outnumbering buyers nearly 9-1. First-time homebuyers in 2025 face a dramatically different landscape than they did just 3 years ago, now offering significant opportunity to negotiate more favorable terms. The detached and townhouse sectors are also witnessing significant sales decline year over year. Despite a marginal gain in some 416 townhomes, a clear divide has emerged. Some sellers are still holding on to 2022 valuations, while buyers are strategically waiting for better deals. Despite this cooling trend, select property types are still sparking bidding wars, reminding us that the market is adjusting and deals are still happening. Preparation is key. Trade war jitters might be giving borrowers cold feet, but don't expect a housing meltdown, because there's always going to be Canadians who need to buy a home. Whether there's turmoil or not, life happens, from growing families to health shifts. Real estate goals persist, making readiness your strongest asset in any market. Final thoughts. The election housing plan is a long-term vision that's more like a marathon than a sprint. In the meantime, expect a slow, steady market with lots of regional and property type nuances. If you're thinking about buying, selling, or investing, now's a good time to do your homework, shop around, and keep an eye on both government policy and interest rates. For those ready now, financially qualified, imagine you could buy a home in 2009 all over again. Could 2025 be a repeat of the post-2008 opportunity? History reminds us that acting amidst uncertainty can yield historic gains.